I did it. I passed the Futures Prop Firm Evaluation Combine test. They all call it different things, but I passed, and now I want to share some lessons with you that I've learned and give you some rules that I think you should apply in your journey. Yes, all prop firms have different rules here and there, but the rules that I give you within this video are going to, in my opinion, help you regardless of whatever prop firm you choose, because they're going to keep you focused on things that need to be focused on, which will in return help you avoid those bad situations. Now, I know right off the get-go, okay, Clay, which one did you use? What was your prop firm of choice? I chose Take Profit Trade, and I'll explain more why as I go, but if you want to learn more about them, how the rules work, and just how it works in general, I'll put a link down below, and make sure you use that link because it will give you the best discount possible. They're always running promotions, so that'll ensure, like I said, you get the best deal. I'll put a link down in the description box. So I want to just walk you through my stats real quickly, and then I'll share the rules that I did learn. So first off, and this is one of the reasons why I like Take Profit Traders, you basically have a choice within the world of prop firms. Do you want to be able to pass tests quicker, or do you want to get paid out quicker? And I would rather start to get paid out quicker, so I'm willing to put more time up front with that test phase. So in this situation, you have to trade for 5 days. I know other prop firms you can pass on the very first day. And again, I'm not saying there's anything right or wrong with these. It's just a matter of personal preference. So I weigh getting paid quicker rather than being able to pass tests quicker. So you had to trade for at least 5 days, and it took me 7 days to pass everything. There was a profit target of $6,000, and I made $6,046, which was a mistake. And this is kind of a little mini lesson and something to keep in mind is this was because your account resets. So once you pass the phase and you move into the next one, you're back at zero. So in other words, that $46, it didn't help me at all. It was $46 of extra risk because I let the position move $46 profit more in my favor, which I did not need to do. So I was taking on more risk because as the price is moving to give me that $46, it could have turned around. It could have turned into a failed trade. So you want to be able to maximize whatever the profit target is. You want to hit that right on the nose because anything above the profit target is just additional risk that you don't need to be taking in order to pass. So just keep that in mind, and that was a screw up on my part there. As far as, once again, going back to the rules and how they want you to show consistency, they want to show you, be able to demonstrate that you can not just make one trade and kind of just luck out, which again goes back to why they were requiring the 5 days. Then they say, well, you can't make anything more than 50% of the total profit. So the total profit goal was $6,000. So right there, the biggest day I had was $2,617.50. And I should note that these videos, or that you can see all these trades on the YouTube channel. Each day I had as part of the channel. So if you want to go and see that $2,600 trade, that is out there for you to watch, which was, below the 50%. And then over here, they just have the general rules. But those are the personal statistics of how I got through it. So 7 days, screwed up, went above the profit target, and then I did a pretty good job of trying to maximize that 50% there without going over. So now let's get into the actual rules that I would say definitely need to be considered. Rule number 1, click the button. What button am I talking about? This one right here. Exit at market, and more so just cancel everything. So I will say, as a compliment, boy, does this platform make it very, very easy to enter in orders. I mean, you can go right here on the chart, click, and then they're giving you the option of how you want to enter in your order. You can click right there. And then again, it is super efficient, well done, but this certainly comes with the trade-off of it's so easy, and then it's very easy to forget about them. And I don't think I mentioned it yet, but it took me 3 tries to pass. And one of the failures was because I put orders out there. I did not click that button. I walked away. My orders got filled. And when I came back, the account wasn't quite blown at that moment, but it was basically blown and it was game over. And it made me feel a little bit better because talking to members of the community, they're like, yeah, you've got to learn to just build the habit. Like, in fact, get obsessive compulsive about always clicking that button to just make sure that orders are not out there. So something very simple, but like I said, very powerful, as it literally cost me one of the failures. Remember to click that button. Ensure you don't have any orders out there that you're not aware of. Rule number 2, max loss daily and overall drawdown. You've got to understand what these are, how they work together. I did not, and it did cost me a couple of accounts that I failed with. And they are going to be a little bit different, but again, at the core, you've got to understand this dynamic. So really quickly, and I should note, as I go through this, if your head starts to hurt and spin, and don't worry, the platform will track this for you, and I'll show you where you need to set that up at. But I still nonetheless want to walk you through exactly why this is so important and how it can very, very easily get you if you kind of lose focus on it. So there's two key numbers. The daily loss limit, pretty self-explanatory. You can lose up to $2,200 in a single day. And then the overall drawdown is $3,000. So from a bigger picture standpoint, you can lose up to $3,000. But here's where things get a little sketchy, not sketchy in a bad way, but just if you don't stay focused on it from your trading perspective, yeah, things will get sketchy. So for example's sake, let's just say that you lose $300 in a trade. Well, if you lose 300, and this is, what happened to me, and I know others, is, okay, well, I've lost 300, so that means the amount I can now lose is 2,700, which is true. But if you're not paying attention, and then your next trade is a $2,000 loss, you may be saying, okay, Clay, well, that's not good. But I mean, you could have lost 2,700. So you lost 2,000. That means you have 700 left. Incorrect, because what you have to remember is after that $300 loss, what did this number go to? That number went to 1,900. And per my little example here, if you just lost $2,000 in the same day on that next trade, what just happened? You just violated that rule and you have failed the test. So you've got to keep in mind that, yes, you have a losing trade here, and yes, that will influence that. But keep in mind the daily max loss, because you can't go and violate that. So again, if you lost 300 here, that's 2,700. If you then go and lose 2,000, because you have to subtract 300 from both those, which puts you at 1,900. But if you then go and lose 2,000 on the next one, yes, you're okay from this category. You would not be okay, though, from the daily loss limit category. Now, another potential scenario is, let's say one day you lose, $500. So right here, what would this be? This would be, well, 2,500. And then you show up and you're thinking, okay, well, the next day, how much can you lose? Well, 2,200, right? Yeah. And would you be okay over here? Yeah, you would still be okay, because at that point, losing the 2,200, you've hit it. You can't go a penny over it, but you've lost 2,200. Okay. Well, now what does this do here? Well, we've lost 2,200, so we've got to eliminate that, and this takes you down to 300. Again, I know, wait, what? So much math. The program will take care of it for you. 300. So now you show up the next day. All right, got 2,200 to work with, because that's my daily loss limit. Is that true? Hopefully you're saying, wait a second, Clay. No, that's not true. You don't have a daily loss limit of 2,200 anymore, because you've eaten away at so much of the overall drawdown. You only have $300 to work with. Yeah, so if you go and lose $301, sure, you're within the daily loss limit by only losing $301, but you've just violated the overall drawdown over here, so you would have failed the test. So you got to keep in mind, what's the max loss for the day? What's the overall drawdown? Because those numbers can, as if I did my job right here, can really start to get squirrely in a hurry. And like I said, that's something else that cost me. I didn't pay close enough attention. And when you don't pay close enough attention, yeah, failures happen. So what can you do about all the math? Well, within the platform here, I've also learned that you can add this account tab, and you click on the account tab. It will share with you the numbers that you need to be paying attention to. And these are the columns that you really need to have. Right there, distribution, drawdown, net liquidity. And then right here, the distribution to daily loss. So as you go on the day, watch that number. It will change for you. Put that column there, and it'll tell you how much you have left on the day to lose. But then overall, right here, it's going to be telling you how much you have from an overall standpoint. So the overall, the drawdown right there, and then you have the daily loss, the daily max. Like I said, everybody calls it something a little bit different, but this is a way that's very black and white. You will know down to a penny, okay, how much can I lose from the daily standpoint, and how much can I lose from the overall standpoint? And that way you are right on the same page in terms of where you stand, because I cannot reiterate this enough. You've got to understand these numbers and not let them deceive you in the sense of, okay, I have more wiggle room than you actually have because, yeah, that bit me a couple times. Rule number 3, use the micros. Now, I am referring you to this class because I don't want to go too far down the rabbit hole, but if you want to learn more about just futures as a whole, including the micros and how everything is working, then I do offer a free 4-part series for futures trading. I'll put a link down below because I'm going to move forward from this point, essentially assuming you know how they work. But if you are completely new to futures and you're thinking, okay, this all sounds really neat, but like I don't even know, just check out the class. But that is a key rule. Use the micros. So in what way do I mean? I've done other videos on this idea, but what I really enjoy and find so convenient about futures is you could be looking at a setup and maybe you're not quite like, oh, I absolutely love this setup, but I mean, I wouldn't mind taking the trade. In many situations, you just don't do it because you have to go find something else. So in the world of stocks, all right, well, let me just go find another ticker symbol. And not that there's anything wrong with that. I mean, I've traded stocks for many years, but that's one of the things where I've noticed it's so much easier to take advantage of the same exact situation in just a less risky way, which is how you should deal with those circumstances where, yeah, maybe you don't quite love it, but yeah, I mean, it's good enough, but I don't love it. So like, I want to be able to approach this, but just in a less risky way. And futures just opens the door through the micros. So right here, we're looking at the NQ, and just for, teaching purposes, the NQ is more risky. Now, yes, you can make more money on it, but with the opportunity at more money comes more risk. However, if you were just looking at this situation, you're thinking, yeah, not quite there. All you'd have to do is come up here and click on the minis, or excuse me, the micros. And right here, you see the same exact situation, same exact pattern, same exact everything. The only difference is you have less risk. Once again, to be clear though, if you are right, you'll be upset. You're like, I just, because you're not going to make as much money. But it still allows you to get involved with trades. For me, it quenches the urge of, okay, I'm a trader. I want to be trading. I want to be taking trades, which is a very real thing. But it allows you to, like I said, quench that thirst, but in a very, very smart way because the risk is so much more minimal with these micros. So that's something else that I would say to keep in mind is don't just show up saying, I'm only going to trade the higher risk one, the ES or the NQ or what have you. Factor in, be aware of the micros, and that'll allow you to still be able to trade, still be able to take advantage of situations that maybe aren't quite A+, but at least allow you to still put some money into the game and find some success within a trade. And just make sure that from a mental standpoint, you're not putting yourself in this situation of you're getting so frustrated because you can't quite find that setup you like, so you haven't made any trades, and then you start making exceptions to rules. And then if you have any experience, or maybe I'm alone in that, but I think a lot of people can relate to that. Things start to get really, really squirrely in a hurry when you just start making exceptions to the rules because you're getting frustrated because you can't quite find that perfect setup. By using micros, you don't need the perfect setup. Yeah, you still need a good one, don't get me wrong, but you don't need a perfect one, and that is very, very valuable and something that I would say consider, implementing within your journey. So those are the big things that I learned. Click the button, daily loss, overall loss, those drawdown numbers, and then the power of using the micros. Those are definitely pillars that I think you should be using within your journey. And like I said, it led me to some pain, some heartache, some super frustration when you fail and you're like, oh, I should have been, but it is what it is. So hopefully you can learn from my mistakes and do better than I did. I would love it if you could pass on your first or second, within a longer one. I realize some of the brokers you can pass easily within one day because that's just how things are set up. But keep in mind, they do get you, you're still going to have to put in the time. And that extra time does slow down the payment methods. But like I said, that's why I like Take Profit Trader. I'd rather just have more required time, more required you being able to prove consistency at the front end and then be able to get paid quicker on the kind of the back half of the journey. So like I said, if you want to learn more about Take Profit Trader or get signed with them, make sure you use that link down below. That will ensure you get the best deal possible whenever you are watching this video. And make sure to check out that free 4-part series if maybe you're a beginner or totally new to futures trading, but you're thinking, oh, that looks interesting. Or maybe you're just new to the prop firm world. So as a nutshell, they're prop firms. They just allow you to put very minimal of your money on the line up front. And then if you can prove yourself, you do have a whole lot of upside reward. So any questions, anything like that, please leave those down below in the comment section. And then if you enjoy this content, if you enjoy these videos and you're looking for a way to support the channel in a very easy, very free type of way, please hit that subscribe button. It really does help out. So thanks for watching. Take care.